title of the presentation, Green Battery Materials, is no accident. We're trying to highlight here the obvious, which is we need more battery materials, and investors and regulators are insisting that those materials come as green and clean as possible. To that extent, you're likely to see companies who can produce in that fashion seeing green premiums, and I think all roads really lead to more recycling and more materials recovery. So to that end, I'm going to tell you a little bit in our 15 minutes about what Neometals is up to and how it is that we're supporting that. Historically, Neometals started its listed journey in Australia. We were an exploration and a mining company. We had gold assets. We then changed focus to lithium and developed the Mount Marion lithium mine. And, with big partners, we turned that into what is now today the second largest generator of lithium units globally. So we sold out of that business, our interest, to our joint venture partners. And today, Neometals is very much a different beast. It's an emerging, sustainable battery materials producer. I emphasize producer because we're producing cobalt and nickel concentrate at present from our recycling facility in Germany, our small facility in Germany. And really the business has come about to where it is today through the development of mineral processing technologies. So we've got a suite of different technologies, but there's three in particular that underpin three separate business units. And those business units that you mentioned already, Gilbert, those business units are looking to source feedstocks that somebody else has already dug out of the ground, so we're not exposed to mining risk. And then we're applying our technologies to those feedstocks to generate the battery materials from recycling, materials recovery, and downstream processing. So to that end, you've got a battery recycling endeavour, a Vanadium Recovery business unit, and a lithium chemical business unit as well. And I think, here it's just worth emphasising, all of our technologies are either patented or patent pending, and we've had a strong history of working with big partners. So what everyone's looking at here is a little bit of a snapshot of those three business units. They're represented as pillars here on the screen. I'll talk a little bit more about battery recycling, so I'll park that for a second. But what you can see across these three business units is that they all involve partners with joint ventures on all three of them. And it's just trying to show you and give you a sense of who our partners are and in which jurisdictions. So if you move your eyes across to the right, the Vanadium Recovery business is all about applying our technology which pulls high purity vanadium out of steel byproducts, and we're doing that in Scandinavia. The initial source of feedstock is coming from SSAB, and that's a very clean process where we expect a net zero or net negative CO2 footprint for pulling out those critical metals. If you move your eyes to the right again, the lithium chemical business, slightly longer development time frame. We, Neometals, have partnered with a very big company called Mineral Resources. We have a joint venture called RAM, and that joint venture is looking to partner, or has partnered, with Portugal's largest chemical company, Boden. And what we're looking to do there is apply the Neometals technology, which is using lithium chloride as a feed source, and we're splitting that material using electrolysis, so passing an electric current through the material to separate the lithium and the chlorine to produce lithium hydroxide. So they're the three businesses. And really one thing worth emphasising here is, Neometals is unique for the fact that we have exposure across those business units to, in this image, 5 in green of the 6 key battery materials that are impacting the energy transition. And in fact, the recycling alone provides exposure to 5 of those materials. Very strong focus on sustainability. I won't talk too much to this because I think once you've heard what we're doing, it'll give a sense that it's just cool business for us. It's not just generating green materials at the end of the day. The processes that we use to generate those materials is inherently very green. So we're up to year 4 of sustainability reporting. So let's zoom in on the battery recycling itself. This has not been an overnight success. It's been a 6-year journey and counting. We started off developing a flow sheet for lithium-ion batteries. We then changed that flow sheet when we saw the volumes of vehicle batteries that were likely to come. We've bench tested it. We pilot tested it in Canada. That drew the attention of a very big German company called SMS. And since then, we've actually joined forces with SMS and formed a joint venture that we call Primobius. So, look, essentially the business's intention is to be the leading provider of recycling services to OEMs. And I say that because this is not a cottage opportunity. This is a really large industrial opportunity. The graph on the left shows you, if you can see my cursor, we're about 2024 here, and the predominant scrap, according to forecasts, or the feedstock rather, is scrap from production. Interestingly, what we're seeing in our production facility in Germany is the majority coming in as in module format, which means they're coming from warranty returns or vehicle recalls or car crashes. But really what we're doing is gearing up to be in a position to accept the very large volumes that will come 10 years hence or 8 years hence in those green bars, and that's end of life. And the reason we want to do this is because for every ton of batteries that we get, you're seeing an awful lot of very valuable raw materials which are supply constrained. So for every ton, give or take, it's akin to having a mineral concentrate that's 15% copper and nickel, and 2% cobalt and lithium. So that's a really, really high-grade starting material. What we've done is we have designed the process essentially today to take up feedstock from cell scrap, and we're evaluating a 20,000 tonne per annum operation. But in parallel, we're also studying what a 200,000 tonne per annum operation looks like, and that's in order to be ready when those green bars come from my prior graph, the end of life volumes. Just a little image here to show you the sort of materials that we pull out from our process, very high purity metal salts, and in volumes which are going to start to not only complement mine supply, but post 2040, I believe, certainly for lithium, they will surpass as the primary source material for batteries. So this is what the technology looks like. It's a 2-stage process. It's very innovative. It's patent pending. First of all, we're agnostic to the type of format of cells that we get. If they're NMC or LCO, then we're excited to take them. If they're in large format, we discharge and dismantle them. We shred them. We pull out the plastics and the steel casings and the foils. And then that intermediate material, the black mass, goes through to our refining hub, and it's there that we sequentially pull out the valuable cathode constituents, being nickel, cobalt, manganese, lithium. We get left with a carbon residue and an AMSL, like a fertilizer material, as a byproduct. So the intention there is to sell the metal salts back to precursor manufacturers for new batteries, and thereby we close the loop. So it's not a winner-takes-all approach with hydrometallurgy. However, being 6 years into a development phase, we have a real time opportunity in Europe and North America. Regulation is one of several really strong tailwinds behind what we're doing. There's the European battery regulations and the recently announced EU Critical Raw Materials Act. They're both supporting our business extraordinarily. With the battery regulations, the things to look out for here is there's quite a big stick if you are an OEM in this space. You need to declare carbon footprints. There are minimum recovery rates here. You need to show, CO2 and where the materials have come from in the supply chain. And year on year, those requirements get harder and harder. There's also requirements for us, the recycler, to make sure that, the minimum recycled content keeps going up and that we're able to extract increasing percentages of, the key materials. So that's very helpful to our business. And it's really forcing the hand where recycling isn't negotiable. You're also seeing here, the supply chains flexing in terms of where future supplies come from. These graphs just demonstrate supply shortfalls across the top, which are expected for the key materials. And the EU particularly is insisting that recycled content goes into new cells, and that's increasing year on year. So again, helping our business. And one of the reasons that is less spoken about, but recycling is an absolute necessity, is because if you're an EV manufacturer, when your vehicle rolls off the showroom floor, it's going to have a bigger CO2 footprint than the combustion engine equivalent. The reason being is the battery materials, which are mined and transported around the world. The best way to alleviate that or reduce it is by recycling. And thereby, your second generation of batteries has a far smaller footprint because there's no mining, there's no transport and processing. And the image on the right in the baby blue where my cursor is shows you hydromet recycling versus other sources of those raw materials. And you can see that the CO2 footprint is far, far smaller. Hopefully, I'm not going too fast for the translator here. This is a slide that shows you some images of the plant itself and SMS. So let's talk to SMS. The reason we partnered with this group, the timing was perfect to bring on someone that had a skill set that we didn't, and that is plant building and the ability to performance guarantee the plant. An extremely reputable company, some 15,000 employees in nearly 100 sites. They're 140 years old, and such is their capability. Through COVID, they built the plant that you can see on this slide. On the left-hand side is the shredding circuit, which has a permit to commercially operate, and we did that because customers were asking us if they could get rid of the batteries that were in storage at their facilities. And on the right-hand side is the hydromet refining circuit that stays at a demonstration scale. Sorry, jumpy slides. And this is the way we intend to make money. The business model is intentionally very flexible. We're happy to act as principal, where we own the plants, we sell the materials, we make our own margin. And that's what we're doing in those images you saw in Hilschenbach, Germany. We're happy to partner, which is something we're looking to do with a Canadian company called Stelco. And the partnership is all about sharing the economics. The partner provides the feedstock, we return the chemicals back and close the loop. So that has obvious advantages. And thirdly, we're happy to license if the opportunity is large enough and make a royalty. So what we miss out on margin per unit, we make up in volume. And this is really what's distinct about our recycling business. Rather than raising a lot of money, making commitments on building out capacity and then scratching around to find the feedstock, our business model is different. We want to find the partners first, they bring the feed, and then we make investment decisions to build big plants. Okay, so our pipeline looks as follows. Top left in green, that is our operation that is currently underway in Hilschenbach, Germany. It's 10 tonne a day. To give you some perspective, the plant's a lot bigger, but the permitted capacity is 10 tonne a day. Next cab off the rank, we are cooperating with Mercedes. We're supplying them both a shredding and a refining circuit for an integrated 10 tonne a day plant in Copenhagen, Germany. Next, we want to provide the same to Stelco in Canada at Lake Erie, but that's 5 times bigger, 50 tonne a day. And really, this business is all about scale. We have a desire and an aspiration to do something in Germany, and that's where we're doing our evaluation studies now. So really, this is about providing big volumes of capacity and skill set. On the left, you can see the sort of recycling capacity required in the different jurisdictions. If you look at Germany alone, it's going to be just under 200,000 tonnes per annum required by 2030. So bear in mind, we're talking 20,000 tonnes per annum as our first plant. And on the right, it's just showing you the sheer value of the materials coming out of recycling and leading into 2030. You could be exceeding 600 billion euros. So it's a very valuable and important industry. I just touched quickly on Mercedes. We have a cooperation. They are a customer. We're providing them engineering services. We're supplying them plant and equipment for them to build and own a plant in Copenhagen, Germany. It's a pilot, and we'll cooperate with them for the next 5 years and look to the future for how we help with their broader recycling commitments, which are very, very large. If you look at 2030 on the right-hand side, Mercedes alone as a cell maker and a car maker are going to have upward of a need for, let's call it circa 900,000 tonnes per annum of recycling capacity. We can't provide that solely all the way around the globe, but I'm just trying to give you context that they need plants double the size of what we're talking about, and they probably need, 50 of those plants. So really significant partner for us. Likewise, Stelco in North America, a slightly different company here. They are a steel manufacturer. They're transitioning to electric arc. They need more steel scrap. They're going to get the scrap from vehicles, and increasingly those vehicles will come with batteries. So Stelco will fund the feedstock. We have an option to enter a JV with them and to recycle together in North America. If we don't do that, it'll be a licensing operation. Make that decision in the September quarter. There's just an image here showing you the importance of Germany, and we're doing our studies there in Germany. So watch this space. The hub study will be out in June, and that will show the economics of the refinery. On the image to the right, you can see the economics for the spoke, which is the shredding facility. So really generous margins here on our operating costs. In June, you will see a new checkered line for an integrated operating cost. So let's pause and wait for June so that analysts have a better sense of how to value our business. And look, really here you're seeing our timelines. I think the market's looking forward to seeing the spoke shredding supply contract from Mercedes. It's also looking for the outcomes of that hub study. So, we look forward to providing that information. I think this business is unique and interesting for the fact we have an advantage. It's a very green, environmentally friendly solution. It's very flexible in terms of the business model. The technologies support growth by virtue of different projects, this one particularly, and the economics are great. So, look, I'm going to stop here and open to questions in a second, but really the three takeaways I think amongst a suite that you can see on the screen is ESG aligned business, seriously ESG aligned, a huge growth opportunity in recycling and in fact with the other projects, because each technology spawns different projects, and we've got a very clear strategy and really big exposure to those transition metals. So at this point, I will be quiet, and if there's any questions, I'm happy to field.
Thank you, Jeremy. So there's a couple of questions here. The first one from Meng Lin is asking about, maybe you can elaborate more about the potential and the value, the significance of the partnership with Mercedes-Benz there.
Yeah, look, it's particularly significant for us. Initially, we are supplying them with plant and equipment for their pilot in Germany, which we are the technology provider to Mercedes in their home jurisdiction. So that's pretty exciting. The collaboration or the cooperation we have with them allows for us to rub shoulders, be in their facility, potentially full time, and we learn about their view of the world with respect to new technologies, new chemistries, and then the whole value chain, dismantling, discharging, logistics. So that's valuable to us, obviously, and we share with them the whole time. But the bigger prize relates to what happens with the cell scrap from Mercedes design production and then production in partnership with ACC, and then what happens at end of life. So that's really where we want to help them in the longer term. So hopefully we do a good job, and we're certainly intending to do that.
Good. The next question from Wine is asking about, are there any similar companies like potential competitors or the same to you that are targeting the European battery market?
Yeah, look, and I did mention that this isn't a winner-takes-all industry. In terms of hydrometallurgy, which is what we're doing, there are several competitors in North America. There's a couple of listed companies. Well, at least Lysical, there's a New York Stock Exchange, that is a similar concept, and they're doing well. Likewise, Redwood Materials, there's some South Koreans, Sungil, and in Europe, there's a lot of aspirants. There's some big companies like BASF, but being 6 years into development here and with a very large automotive partner, I think there's some obstacles to join this market, and we look forward to getting into operations and certainly demonstrating through our partner our capability.
Indeed. So last questions are combining the two different person asking similarly. So asking about the game plan, possibly basically meaning the milestones, and are you targeting in the near or long term of your company?
Yeah. So look, on recycling, I touched on that a moment ago, and really look, just to recap there. So next step for us is to confirm the supply contract for the plant and equipment for Mercedes, both bespoke and then the hub will follow. We've got a study coming out that shows the economics on the refining hub, and that will complement what's already in the market, which is the numbers we've put out for the refining bespoke facility. So with them combined, it allows analysts and others to take a more in-depth view regarding valuation. But then more broadly for our business, we're in an exciting phase. We've put out a suite of announcements in relation to the vanadium business. We've just formed a JV there. We've secured the feedstock. It's a permitted facility that we have in Finland. The EIB is down to its last decision-making process to support us with debt. So certainly watch that one as well. And with the lithium chemical business, a very big partner in Boden in Portugal. We're going to go through the motions here with PFS, becomes feasibility, becomes bankable studies, finishing off bench work, becomes pilot, becomes demonstration in Portugal. So very, very exciting space, just slightly further out in terms of when, big decisions and development occurs with that project.
So a lot of things on the go, very exciting times ahead of Neometals.
Yeah, I think so.
Yes. Thank you, Jeremy, I understand it's really early morning on your side there. I appreciate your being with us today indeed.
Yeah, pleasure. Thank you, everybody, for your interest.